One of the hardest thing as a trader is to know when a breakout is actually going to happen. A lot of times traders get trapped and lose a lot of money. And then when the actual breakout does happen, they've been exhausted to the point where they actually miss that breakout. So I'm going to talk to you about how I caught Google yesterday and how I actually got trapped multiple times before the move yesterday. But it's now paying really, really nicely with a larger position size. But this framework can be applied to other stocks or any other ETF that you might want to look at for a breakout. Just because it's Google doesn't mean it's just Google specific. So what we're going to do, we're going to talk about the mechanics or the dynamics of a breakout and how to track a stock from one day to another and then actually catching that breakout. Now, this is the daily chart for Google, and you can see that in the pre-market, we're actually gapping up above yesterday's highs. We saw a beautiful breakout yesterday, and we're right below this all-time high over here around 328, 329. And so what we're going to talk about is this yesterday candle. It was a fantastic move higher. And before we dive into the details on the 10-minute chart, let's talk about what's happened here on the daily. So the daily chart, the weekly chart, the monthly chart, they're all higher time frame charts. And I think it's important to always zoom out to understand the broader context in which a stock is trading. Now, the broader context here is that Google is in a very clear uptrend. So the uptrend goes here. We saw a little pullback. And then once we broke this top of this bounce area over here, we saw this acceleration into new all-time highs. Now, ever since this high over here in November 25, we've seen a couple things. The first thing I see is a bull flag over here, and that bull flag actually failed. In that instance, we failed, but we also filled the gap. And buyers stepped in exactly where they had to after this big down candle over here. So I'm seeing this as a really nice and good sign for bulls because bears had the chance to push it lower, but they failed to. Bulls stepped in where they had to and pushed price higher. Now, after this kind of save over here, one might assume that we're back into this channel that we're in here. It's not a bull flag anymore. It's more of a channel. And so we recovered, some real nice trend lines here on the daily. And I could draw another trend line like so, just to actually define the channel for you. So this break over here was a break of the channel low, acceleration, the fail by sellers to take control, buyers stepping in, pushing it back into this channel, and now we're back above. Now what's important here, a few things on the daily. One, we traversed all the way up to the top of this channel and then consolidated, and then eventually we broke higher. You can see that over here. It's a good example of where I was trading the upside move here. We caught some of it as a scalp, but then had to cut it because it just failed. It popped and reversed. Now, this reversal was a very ugly reversal, right? The reversal actually moved all the way back down to the trend line, actually back tested it, which is a very good sign. It just tells me that the buyers are stepping in exactly where they had to, once again, and buying up the stock into new highs over here. And then once again, sellers stepping back in and pulling it back down, holding the 20-day moving average, and then pushing it up. Now, what's important to kind of hit home here, a few things. One, the backtest of the trend line held. The backtest of the moving average is held. On every instance, the buyers step in exactly where they had to, and they pushed prices higher. Now, in order to really understand this candle over here, what I'm going to do, we're going to zoom in, and we're going to look at the smaller time frame. And the smaller time frame that I trade in is the 10-minute. I just want to show you a few instances here. A few days ago, we opened up, it showed a really nice pre-market structure here that broke out really quickly, pulled higher, and then the bears stepped in and pushed it into new lows. Very ugly. The day after, an inside day candle. Now, the day after that, once again, the bulls step in, pushed it higher, bears step in, and pushed it lower. This kind of tug of war, this increased activity of the push and pull between the bears and the bulls is one of the indications of, this will resolve to one side or another very, very soon. when you have these aggressive moves up and down within very quick amount of time, that is one of the signs that you have to look for. But, just going through the sequence, you can see that there's just no edge here, right? The bulls are pushing, the bears are pulling, the bulls are pushing, and the bears are pulling. Now, what's interesting is that yesterday, and within the last 4 days, we've had multiple attempts to push higher. Now, yesterday was different, right? Yesterday was different because Google made a real nice run in the PM, and then that got sold into closely before the open. But very quickly, bulls stepped in and broke PM high again. And so, just like before, watch the PM high, the morning high in the pre market to break. And if it just breaks without even a back test, when bulls just step in and take control like that, you have to make note of that. That is a very good sign. That's a very strong sign. And so, for me with this one yesterday, this kind of consecutive attempt of pushing higher and the consecutive failed attempt by the bears to push it lower, I've done this for a while, and as a bull, it's exhausting, right? It's on days like today where you get this like, exhaustion by the bulls, where they sometimes miss taking this trade that they've been trying to catch for multiple days in a row, right? But yesterday I felt very confident with this push because on very high volume, very quick move at the open, even looking at the 1 minute candle, and I don't advise anybody to trade on the 1 minute, at least not unless you're like a scalper. But even on the 1 minute candle, you can see that within a short amount of time, 1-2 minutes, we tested the PM high and then eventually broke higher into new high. So for me, that is bullish price action, and I did trade Google yesterday, and I'm holding a swing for today, which is starting to look like a continuation possibility. And a continuation is just when the bulls step in, hold previous day high if it gets tested, which is around 326, and you see this continuation into that magnet, which now for me is the all-time high around 328, 329, 328.83 is all-time high if we're going to be very exact here. So, for today, I'm going to watch that continuation, which is a possible roll for me, which is when I take profit from the previous strike, I roll it into a higher strike and attempt to play this blue sky breakout. So just in conclusion here, right? Look at the larger time frame to assess the trend. Watch the possible continuation pattern. When it fails, keep at it. Keep at it. Watch it. See what the bulls actually do after an ugly candle like this. Do they step back in, or do the bulls take control and push it lower? Right? That will tell you a lot. When you get a quick bounce within a day or two, that just tells me that it's a dip buy, and the possibility of breaking higher, the possibility of breaking this pattern that you're looking at before increases a lot. So hopefully that was very clear for you. If you like this video, feel free to hit the like and repost this so others can see. Thank you so much, and take care. Bye-bye.